Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the market's positive day and strong earnings reports, increasing jobless claims, AI predictions for crypto prices, job cuts in the financial, tech, and food industries, password sharing crackdown by streaming services, interest rate changes in various countries, Volvo's surge in shares and discontinuation of Polestar funding, positive earnings reports from Meta, Amazon, and Ferrari, Lululemon's upcoming men's footwear line, the use of AI to predict crypto prices with divided expert opinions, the top 5 states to buy a house, and Peter Lynch's investment advice.
So let's talk about the economy and some of the latest news. It seems like jobless claims have hit a new high lately. Last week, we saw an increase of 9,000 claims, reaching the highest level in almost 3 months. This rise can mostly be attributed to more layoffs and the lowest level of planned hiring since 2009. And it seems this trend is continuing in some industries. Deutsche Bank, for example, is planning to cut 3,500 jobs, while Okta is laying off 7% of its workforce. The financial sector alone has let go of 23,238 workers, making it the worst month for the industry since September 2018. Tech companies are also facing challenges, with 15,806 job cuts, the highest number since May 2023. Even food producers have fired 6,656 employees, which is the largest figure since November 2012. But it's not all bad news. There are some positive developments too. Labor costs are cooling down, which can be seen as a positive factor. Additionally, productivity is on the rise, which is certainly a good sign for the economy. Now let's take a look at some global news. Streaming services like Disney+, Hulu, and ESPN+ have decided to crack down on password sharing. So if you were sharing passwords with your friends, you might need to find another way to enjoy these platforms soon. In other news, the Bank of England has divided opinions and left its policy unchanged. However, they did mention that interest rates are currently under review. On the other hand, countries like Brazil, Chile, and Colombia have once again lowered their interest rates. Lastly, there's some positive news for Volvo. Their shares have jumped 26% thanks to higher sales. And they've also announced plans to stop funding the electric vehicle brand Polestar. We've got some positive earnings reports that have got investors buzzing. First up, Meta, formerly known as Facebook, is having a real party with its latest earnings report. They knocked it out of the park with an EPS of $5.33, beating expectations and raking in a whopping $40, $11 billion in revenue. Not only that, but their ad revenue also surpassed projections. And get this, they even announced a jaw-dropping $50 billion share buyback and a 50-cent per share dividend. No wonder their stock shot up 15% after the bell. Plus, their daily active users clocked in at 11 billion, higher than anticipated. And that's not all. Amazon also stepped up to the plate with some impressive results. They saw a 14% increase in revenue from the previous year, and their advertising figures sailed past expectations by $500 million. Talk about a win. They're riding high with their stock soaring 10% after hours. Now let's shift our attention to Apple. Unfortunately, they didn't have the best day. Despite a growth in revenue, their stock took a 9% nosedive after hours due to slower growth in China. Bummer, right? But fear not, because Ferrari is here to save the day. They surpassed Wall Street's expectations for the fourth quarter and ended the year with record profits. Their revenue saw a 17% jump, including a solid 11% increase in Q4. They raked in a net profit of $1.36 billion, wrapping up 2023 on a high note. Well done, Ferrari. And last but certainly not least, let's give a shout out to Lululemon. They're stepping up their game by launching their first ever men's footwear line. This move is expected to help them expand their reach and connect with even more people. Way to go, Lululemon! So, we've all heard about the rise of AI and how it's being used in various industries. But what about its role in predicting crypto prices? Can we trust AI to make investment decisions when it comes to cryptocurrencies? Well, it seems like experts are divided on this. Predictive tools aren't a new concept. As far back as 2015, A paper discussed a stock market forecasting system that used the latest tools to make predictions. According to the paper, it had an average error rate of just 84%. In 2021, another paper was published that used AI to predict crypto prices. The results were quite positive, with the algorithm reaching error rates of 0, 2454%, 0, 8,267%, and 0, 2116% for Bitcoin, Ethereum, and Litecoin, respectively. However, it's worth noting that this study only used 2 years' worth of historical data for training, and it's uncertain how the model would perform in the long run with changing market conditions. While there isn't a fully reliable AI prediction tool for cryptocurrencies just yet, there are some notable names making their mark in this field. Santiment and Pinex GPT are a couple worth mentioning. However, it's important to exercise caution. The Commodity Futures Trading Commission has warned that AI trading bots could be a cover-up for scams. On a different note, according to ARK Invest, the optimal Bitcoin portfolio allocation for 2023 is expected to be 19.4%, a significant increase from 0.5% in 2015 and 2% in 2022. Today, we're going to take a look at the top 5 states to buy a house in. When it comes to investing in a home, it's all about finding the right balance of affordability and potential growth. Let's start off with Pennsylvania. With an average home price of $254,722, it's definitely a budget-friendly option. Plus, the Pennsylvania House Price All Transactions Index has been increasing steadily, up to 88% from last quarter and 85% from last year. Next up is North Carolina. While the average home price is a bit higher at $323,487, the state offers some great opportunities for growth. Prices have been increasing at a rate of 4% per year, with the median price jumping from $201,000 to $302,459 in 2023. If you're willing to spend a little more, Utah might be the state for you. The average home price is $518,806, but don't let that scare you away. Utah has a family-friendly environment and a relatively low cost of living. Plus, home prices have gone up dramatically in recent years, with some areas seeing an appreciation rate of 16.8%. For those on a tighter budget, Kentucky is worth considering. The average home value is just $197,948, making it one of the most affordable options on our list. Additionally, prices have been declining, with 2% of homes selling below list price in August 2023. Lastly, we can't forget about the iconic state of New York. Yes, it may be on the pricier side, with an average home cost of $733,845, but it's still a solid investment. If you're looking to earn rental income, New York is a great option. Studio rentals average $3,495, while 4-bedroom rentals go for around $7,495 in the main cities. Plus, homes in New York have seen a cumulative appreciation rate of 72% in the past decade. Now, keep in mind that other states like Mississippi, Ohio, and Nebraska also have their merits. In fact, they often make it onto lists of the best states to own a home in. So, weigh your options and find the perfect state to plant your roots. There's this quote by Peter Lynch that I came across recently, and it really got me thinking. He said, "If you're prepared to invest in a company, then you ought to be able to explain why in simple language that a 5th grader could understand, and quickly enough so the 5th grader won't get bored." And you know what? I couldn't agree more with him. Investing can be a complex and overwhelming world, filled with jargon and complicated concepts. But at the end of the day, it's important to be able to break it down and explain it in a way that anyone could understand. Think about it. If you can't explain why you're investing in a company using clear and simple language, maybe you don't really understand it yourself. And that's a problem. Because if you don't understand it, how can you expect to make informed decisions? This quote really emphasizes the need for transparency and clarity in investing. It's not about showing off how much you know or using big words to confuse people. It's about truly understanding the company and its potential and being able to communicate that understanding to others. So let's take a lesson from Peter Lynch and remember to keep things simple when it comes to investing. After all, it's not about how smart you sound, It's about how well you understand the game.
In today's episode, we discussed the positive market with strong earnings and jobless claims increasing, AI predicting crypto prices, job cuts in various industries, Disney Plus cracking down on password sharing, interest rate changes in multiple countries, stocks rising on positive earnings reports, the use of AI to predict crypto prices with mixed expert opinions, the top states to buy a house, and Peter Lynch's investment advice to simplify explanations. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at Morning Download. Subscribe.